Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Renick. We are live from Cboe floor in downtown Chicago. It is a beautiful high 40s day. It's a pretty calm day in markets. Perhaps calm before the storm. Tomorrow we're going to get that delayed employment report. Might be giving us some action, especially as I think the story is quickly becoming the Fed and the bond market. If we can breeze through some of the volatility and risk assets first, we're trying to right now. If you look at the chart, firstly for VIX, we've been dealing with an uptrending line. They say you're not supposed to do lines on VIX, but guess what? This line has been working quite well. The fact that we've had volatility creeping higher certainly tells you that there is a little bit of nerves. We're basically at the level that this line has held and added more volatility into markets. But so far today, it's pretty calm. The S&P 500 is just hovering right below the all-time records at 7,000. Horizontal range here, I think we generally can be happy with. What else do you want? Let's not get greedy. Markets in the crypto world got destroyed. Cloud stocks have been getting obliterated, disappearing before our very eyes. I certainly have been using AI more than ever in the last few weeks. It is so darn good. And by the way, it is just the best at solving arguments and holding that button on your phone to get the answer. I'm also seeing AI chipping away at the crypto BS narrative with tons of people posting videos and clips trying to pump Bitcoin, showing articles and videos from months ago. And in the comments, you can see people asking AI, when was this from? And then, oh, it turns out that was Kevin Warsh from 3 years ago. But that does bring us to the bond story, and this is where I think things could get interesting. You've got a little bit of a bid into treasuries right now, but the main thing I'm watching that could potentially disrupt the market on a more broad basis for the coming year is if you get real volatility in bonds. I've had the red light on bonds on my risk radar because I think that the president is making a mistake by fixing something that's not broke. What's not broke is Jerome Powell at the head of the Federal Reserve. It has been stability that has crossed over multiple presidents, and in a divided America, I feel like that's something that I'd be rather rooting for rather than removing. We've had stocks at all-time highs. Right now we have ISMs over 50 in both manufacturing and in services. That is not something that has been easy to come by, and that tells us that the economy is in pretty good shape. It also means that if we start cutting rates for pure political reasons, then we might have blowback potential. I'm not too worried about inflation necessarily, but to the folks' point who say that it has stayed elevated, that is true, of course, as we're pretty close to 3%. If you start cutting rates when the economy is strong, then you are playing with a little bit of fire. By the way, speaking of the AI, I had it plug in today as I was getting ready for the show, that ISM chart, and look what it made for me. Thing of beauty. Look at that. That's ChatGPT right there, showing you manufacturing PMI in the blue, surging above 50 in the last reading. Services PMI, which have been above 50. The dash line is 50. The expansion, contraction, we are expanding in both categories. That's why the risk radar right now is red for bonds, because that's my highest conviction view, basically. Not really sure about where stocks are going to go. Bitcoin still looks like it's under a lot of pressure, but if you start cutting rates when the economy is in good shape, you have potential for yields to move higher in a fashion that maybe could be problematic. That being said, there actually is a pretty big development here that speaks against all of this. I try to be fair and argue against myself when it makes sense. And here's the last thing I would say on that point is that the 10-year yield has moved back down below that 4.2% line. So I didn't really think that was going to be a thing that happened. So maybe I'll be wrong. Maybe bonds will calm down, stocks will break out, and it'll be hunky-dory, and we can cut rates and get even frothier markets. That certainly would be welcome, I think, to many. Will it be able to save crypto? That part I'm not so sure about. Let's talk some metals. Mr. Noel Smith joining me from Convex Asset Management. He's had a pretty good read on the metals. I know he had a silver trade, some puts that were hanging on for dear life, and those activated in the last couple weeks. Noel, today stocks are hanging in there, but the selling is more concentrated in metals and coins. How you doing, sir?
So far, okay. Pretty slow day overall.
Yeah, it is kind of slow, but the pressure in a few categories is pretty consistent. Bitcoin down 2.5%, silver too down 2%. Let's maybe start with silver. Are you still in that position, or did you get out? What are you looking at?
So I still have it on. It's down, even though silver's down today. Silver volatility is down even more. So, puts that are long need the rate of change to the downside to be a little bit more swift. So even though silver, the instrument itself is down, the puts are still down. So those puts are looking more dead than alive. I will probably exit the position. It's a March option, March Regway expiry position. It's fine. It's a small loser for me now, but it's the confidence interval has gone down a lot, especially as silver volatility goes down and a lot of this time has elapsed. It's a weaker trade.
That's interesting. So the fact that some of the wild swings have cooled off a bit, is that what's going on?
Yeah, a lot of the news that would come out has come out. A lot of the margin increases that have come out, the methodology of the margin in at the CME has also changed. So if you put all that into the calculus, that's kind of what I was playing for. When you see something go parabolic, you know that the methodology in which margin requirements are calculated will change, and that's what I was kind of playing for. And that's kind of happened. So again, I can salvage this for a modest loss. It's not a big deal, but I might roll it out.
Okay, well that's fun. The peak for implied vol, the bottom line chart that I'm looking at here for SLV was indeed right before the high of 110. So to your point, volatility's come in a little bit. However, if that means that the puts you were holding on to are decaying in value, that also though makes it cheap to maybe take another swipe. Is that maybe the idea? Cheaper?
Well, the market is excellent at being fair, right? The market is the aggregation of all these opinions and all these people coming together. So the market is not really interested in like taking money from me or giving money to me. They're trying to make it fair so they can trade around that bid offer spread or something like that. They're probably fair the way they are now, which is to say they're not that great. So I think that extending that trade out into time or maybe moving the strikes around is more appropriate, but just holding some March puts that have, I think, 27 days left of trading days left to trade. It's not that great. And those things are going to start to die at a non-linear rate because puts don't die like this, right? They die like that. And I don't want to taste all that theta if I don't have to.
Okay. So the potential for price direction, do you feel strongly about that, or is it more kind of the vol dynamic that you like to play? Because when I look at the chart, as far as price goes, I mean, we've got these lower highs, but, you still, I guess we're kind of making some lower lows now as well. So the chart is kind of decayed a bit in silver. It doesn't look like that for gold, I would say. But I guess, this thing is such a volatile asset that people are still going to want to speculate in it.
Well, the vol in both of those things are down today, but I guess the crucial point is that people should understand about volatility is that what it really is the distribution of events, right? So if it's a very narrow distribution, the wings are relatively cheap, but if it's a wide distribution, the wingier options, in other words, the 20, 15, or 10 delta options are going to be higher priced. But as volatility compresses, it usually will compress at a different rate of change on the wings than it does at the middle part of that distribution. So as volatility starts to change and compresses, the delta of those options also changes. But crucially, it changes at a different rate of change than the at-the-money options. So what I'm saying with all those crazy words is that those little wingy puts are not as useful as they were when the volatility was high. In other words, the market is pricing more sensibility into silver and gold as a function of each other and as a function relative to themselves. So it's a weaker trade, and it's probably time to de-risk that thing, even though I still have it on.
Noel, this is pretty interesting too, because if you think about the feedback mechanism, which we do a good bit on the show, think about second order derivatives and the power of options flows driving price action. When I think about gold and silver, the one that I would think benefits more from volatility subsiding is gold. I feel like for most people, they're fine with gold being a non-volatile asset. It's kind of the classic use case for gold. Now, if it's volatility to the upside, great. But for silver, I feel that has been more of almost like a Bitcoin trading speculative tool alternative, where if the volatility subsides and the options traders leave, that might not be good for silver. What do you think about that?
Well, the proof is in the pudding. I've got short iron condors on in gold, and I've got long puts in silver. So to kind of reverberate back to you what your same opinion is, I think those two things are materially different. And the idea that gold vol compresses and continues to compress from here, I think that's probably a decent trade. And the silver volatility is just kind of eroding. And again, because my options only have 27 trading days left, I just think it's a weaker trade and I want to get out of it. And the idea that I'm going to tell everybody where silver's going, I have no idea where silver's going, but I do think silver volatility is going down. And the skew, importantly, has inverted. So in other words, the calls were bid relative to spot, and now the puts are bid relative to spot. So that is basically saying that the marketplace is kind of flipped that whole narrative around.
Okay, nice. I like that. So betting on volatility subsiding for SLV and for GLD. having a little bit more of a directional position. Take me through. You said you've got what, a spread, a collar on GLD,
A condor in GLD,
condor.
which is
GLD,
which is to say I've defined my risk, but I want overall level of volatility to go down, and or I want the range of the prices to stay within a certain level.
Got it. Okay, and care to share what kind of range that level is?
Nah, probably not. I don't want people picking off my trades and wailing on me, because if you do something big enough, it'll stick out in the marketplace and people can figure it out.
Okay, let me answer me this. Do you think that gold can get to new highs? Do you think that there's a, because I would kind of think that, all right, if I'm looking for a range, maybe I kind of sell something above that 510, because things were pretty darn juicy then.
Of course it can go up. I mean, it's been going up my entire lifetime. Will it go up in a straight line? No. But do I think that gold can go to 5,000? I think it's a matter of time. So do I think it's next week? I have no idea. Do I think it's next year? But I do think it is a fait accompli. I think this will continue to go up. I think if you just look into the macroeconomic environment and the idea that governments will continuously debase their currency ever so slightly all the time, whether that be through Powell or Warsh or whomever, I think that gold will eventually go up.
Okay. Green on my risk radar, by the way, the only one. So I'm thinking maybe short term, if there's any volatility in markets, could keep gold under that 505. But I totally think that the technical, to your point, momentum seems very strong, and it looks like still the most compelling kind of upward trending asset from the price. Which again, if we zoom in, we're at 462 right now, but yesterday intraday a high of 468. So I mean, you've got this kind of a higher lows happening on the short-term chart. So I mean, gold still looks pretty good. Are you dabbling in any of the crypto stuff, Noel? And do you see any of the weakness in that realm filtering into stocks, or have those two officially broken apart?
Well, I have a small position in MicroStrategy shorts, which we're doing great. Then it got obliterated, and then they're doing fine. So overall it's been going okay because I put it on long enough ago, which is to say 60 days or something like that. But that trade in overall has been pretty good, but it's been volatile as well. Am I hating against MicroStrategy? No, I really have no opinion. But I do know that it will decline at a nonlinear rate if it continues to decline. And that's kind of the essence of the trade.
Yeah. Okay. I think for MSTR, as long as this thing is below $200, it's a pretty clear red light. Doesn't seem to be catching much of a bid. The other thing too is that for Bitcoin as well. I mean, we got that bid off 60K, which is literally a line I've had for a long time. So I feel like that was expected. But boy, kind of dead in the water right now. We're going to talk some more about that with Pete Najarian. Noel, let's talk some volatility in equities. What are you thinking about in terms of the S&P 500, in terms of VIX? Walk me through kind of this lull day before tomorrow's employment. Anything stand out to you in terms of the broad market volatility or structure?
I mean, I think the most important thing is really what happened last week and how jittery the market got, and then kind of just everything reverted. I'm pretty surprised. My internal metrics were basically, kind of flashing pretty close to risk off or risk reduced, and then everything just kind of went back the opposite direction and steady as she goes. So the last couple of times that you and I have spoken, I basically said that, we have that long beta exposure. We're in the market. We want the market to go up, and that continues to persist despite the fact that last week was a little bit shaky. So steady as she goes.
In terms of the range for VIX, if we had, not to keep referencing coins, but all the volatility was so pronounced in the crypto world, if we flush some of that out, cloud stocks too, I mean, even just if we forget about Bitcoin for a second, cloud too, we had these explosive pockets of destruction in risk assets over the last, call it 2 to 3 weeks. If that didn't bring down the S&P 500, which is just below 7K, I feel like that bodes positive. What do you think, Noel?
Well, I think what you've seen is the sell-off in software stocks and the rotation with sectors underneath the S&P 500. So the S&P 500 has actually been doing just fine with a little bit of weakness and kind of bounce back. But if you look at what's going on underneath the hood, there's a kind of a lot of activity. And I think that between Warsh and Anthropic's Claude Code, Claude Cowork, and everybody kind of figuring out, man, that this stuff is actually pretty impactful and pretty powerful, which I completely agree, by the way. As to how you quantify that, that's a different measure. But there is a lot of rotation, and that speaks yet again to the dispersion trade, which is to say every individual sector or name has kind of a mind of its own. It goes up, it goes down, a lot of CapEx spending, a lot of assets being added there, but the marketplace as an aggregate still doing fine.
Yeah. The fact that we saw correlations, rise, but not really move too much. I'm not the expert at this, you are, but just pulling up the Core 1M chart, which we've been tracking here on the show, I have to zoom in pretty close to get this number to look like anything dramatic. It's generally been still a fairly dispersed kind of a market, right? I mean, that's the right way to still think about this?
Absolutely. I mean, you've got all these different things doing their own thing. I mean, the correlations were so low. So as to sell that and you continue to make money off of it, there's a lot of asymmetry there. We have this position on very small. So yeah, it's working and, whatever, but it's not so impactful. The relative and absolute levels of this are so compressed so that it's a really tough time to want to size this trade up. But it's been working, and it's been working for a long time, and it continues to work, even today.
Yeah, the market, and this is kind of the divided markets, right? The mirror image market, as I described it last week, where you've got some stuff that's up big in the same days. There were a few days there where you literally had a stock for every sector, one up, one down, and to speak to that kind of dispersion. Today at the top of the list, you've got Datadog bouncing back, tech software company. Marriott, by the way, chart of that looks incredibly impressive. This recovery and travel trade that one of our other guests, Chris Bretcher's, talked about. He was looking at an LVS, which has been in this uptrend. Win as well, slowing back the last couple days. But, this also kind of fits with the Russell. The small caps, there is rotation here, I think, Noel, that has allowed us to skate by some of these destructive events in cloud and crypto and other places.
That's exactly right. So I was reading some reports this morning and doing some homework on it, but it's really just a rotation. So you don't see this stuff manifest at the index level where there's a lot of activity below. So I'm kind of repeating myself, but there is a lot of opportunity to have that relatively sensible vol on and keep kind of a steady market engaged beta long position on, which is what we have.
Yeah. Okay. So market long and then kind of short the short correlations to some extent. You think that kind of holds the rotation trade basically?
Well, it's not quite that simple. It's a relative value trade. So I'm not necessarily saying that I think that you should be short correlations. I think that, again, the relative value, how two things compare to each other, and then the absolute value, which is where is this thing compared to where it's been in history, those things are different. And the overall absolute value of correlations is still very low. Yeah. So therefore dangerous.
Yeah. Okay. Understood. Now the leaders, that could all change, of course, if we get the mags to start powering up, but they really haven't been a group that is just kind of stuck going sideways for now. Noel, good stuff. Thanks for the thoughts. Like to look at the volatility as well as the silver and gold trade too. An important part of that story as well, with volatility subsiding in that category. Noel Smith, Convex Asset Management. Excellent work. A 1 minute break, then we're right back with Pete Najarian joining me, who will call the Super Bowl winner from like 5 months ago. We'll be right back. All right, welcome back. It's time for the gamble as we wrap the football season. Credit to Pete Najarian, Market Rebellion co-founder, who I think called Seattle basically from like day one we started this segment. Pete, what's going on? You feeling victorious?
Well, you know what? They played up to what you expected, right? I mean, I think everybody by the end of the year realized what a great football team they were, specifically on the defensive side of things. But it was, you never really know until it happens. And they did a great job of executing and they dominated the game. Obviously, they kicked a lot of field goals, so they would have done much better had they scored touchdowns on those different opportunities. But still, I thought, as a defensive guy, as a guy who played defense, I was a linebacker. I got to tell you something. I love the Super Bowl. A lot of people said, well, it was kind of boring, not enough
Right.
this, not enough that. I get
Defense
it.
game.
But I love watching the defensive players dominate. I love watching a guy come around the outside and get the quarterback and all the rest of it. So for me, when you get 6 sacks in the game and the defense that Seattle played, kudos to them because every single rule change in the last 25 years goes to the offensive side. And yet these guys still dominated the game from the defensive side of the football. So really, I thought from that perspective, it was pretty impressive. I don't want to say necessarily they have the Chicago Bears defense. I've said that many times. But I got to tell you, given the way the rules have changed, Oliver, that defense might be as good as the Bears defense in '86.
Wow. I mean, to your point, very defensive game, right? Not exactly the splashiest, most wild game, but yeah, credit to you. Identified both sides of the ball early on. I think you called both. I think you said it was basically either going to be Rams or Seattle taking it home. So, are you a Winter Olympics guy, Pete? I don't know. It's hard.
Absolutely.
Some of
man.
it I'm into it. Some of it I'm not.
I'm a former skier, man. So yeah, I'm
True,
all into
yeah.
it. I mean, I go back.
Well,
to
John was in the Alps
skiing.
last week, wasn't he?
We got plenty of snow here in Minnesota too, by the way. So yeah, the whole
That's
skiing
fair.
thing sounds good.
I was looking at some of the Kalshi stuff on there. I'm like, that world is so unfamiliar to me, and but I wouldn't even try. Is there anything that you think is liquid enough or exciting enough the Olympics to wager on, or is earnings season the more exciting market right now?
Well, I would say this. I think you're right on that call. I think earnings season is more exciting. But that being said, if I was going to go back to the sports side of things, it's still men's hockey is pretty amazing, and that's part of this whole thing. There's a couple of different sports I think that find people, find very fun and interesting to watch and all the rest of that, including figure skating, that kind of stuff.
Sure.
I mean,
Yeah.
I think people really do, kind of gather towards those kinds of things. But I'll tell you what, this earnings season's been absolutely unbelievable. When you really look at what some of the presentations have been, what some of the, what everything that they've put together is, this whole thing about CapEx has gone absolutely crazy, I think,
Yeah.
Oliver. The fact that they're punishing so many of these various, whether it's Amazon, throw Google in there, throw Microsoft, throw Meta, wherever you want to go, Google. That's a problem. Everybody freaks out over the fact that, hey, well, you know what? This CapEx is ridiculous. You know what? If you look back to Meta, who probably was leading this whole thing in CapEx when you really go back in time, I think it's been extraordinary. They've executed. They've done what they said they were going to do. And for my money, I think that they're going to continue on with that whole pace, that they're going to continue to develop everything that they are when you're talking about this whole AI space with data centers and you name it. I mean, everything that comes along with it. I think people are pretty excited about what they're seeing there. Now, the reaction, of course, with the stocks has been, well, they're going to sell it because instead of 100 billion, they said 150 billion. Take your pick, whichever one you want, whatever stock you want. But that's really what's really been pounding these stocks. And I think that this will all play out over the next few months for sure, 6 months, however long it might take. But with the CapEx numbers that they've got, I'm really pretty excited about what we're seeing happening right now with the whole movement with AI.
To your point on the CapEx selling, I feel like it's one of the best reasons for a sell-off. The fact that companies that are inventing new things are getting punished for spending so much on that invention and investment, but ultimately it is what should drive earnings. So obviously people want to be sensitive to costs, but the temporary kind of earnings volatility could be a platform for entry into the intermediate to longer term trade. I feel like one way to summarize this, Pete, is just looking at the MAGS chart, MAGS right now, which is holding on to this level of support. You better hope it doesn't break, I think. Yeah. But as long as it doesn't, I feel like this is an opportunity to buy something that has been correcting in price for months. Because going sideways is one way that you fix your P to E and make it, more appealing.
Absolutely. And to your point, I mean, this is something that's going to have to play out in front of us. We're going to be watching this thing very, very closely. Do they have some potential for breakdowns? Probably, especially when we talk about how crypto is influencing so much of the markets as well. I mean, that really is a big story, I think. And I don't know how many people have really been able to stay on top of that. But I mean, even Michael Saylor was on earlier today, and he was talking about strategy, and he was talking about how much Bitcoin and how he was going to buy even more. The guy definitely has guts. He's willing to go down there and to go.
Buying above market price in many cases too.
Yeah, well, when you coming in, I think he owned over 700,000, right? And now he just keeps on adding to what he's got. And you know what? That works until it doesn't. But for right now, it's been working. But I'll tell you what, if you look at any of those stocks, when you look at Coinbase or you look at Mara, if you look at Strategy, these things are kind of moving around based upon these investments that are in the whole Bitcoin world or the crypto world. And it's something I find to be really, really interesting. And by the way, tonight we've got Robinhood, and they have a lot of different factors that touch this whole space as well. So I think that earnings is going to be interesting.
Totally with you on that. Great reminder there. I forgot about those earnings. My stock of the year for 2025, because of its involvement in so many things, the everyday trade, folks trading, investing, making sure they don't get left behind by AI in the market. Big tell there. Hopefully the crypto pain doesn't crush too many accounts from that standard, because if it stays anywhere down below 80,000, it's certainly going to be a slow but steady crush on Michael Saylor. I mean, below his break even, and it's some of the hopes are kind of getting dashed. If you look at some of the betting markets right now, Pete, I'm pulling up Kalshi's when will Bitcoin hit 100K, and not this year, according to Kalshi. All these hopes kind of drifting now into single digits. Obviously, price informs that view a lot. But that's just kind of now gives, I think, some perspective here on it's sort of becoming this game of survival rather than get rich, which a lot of people associate this asset class with.
Yeah, I don't disagree with you. And, 150,000 does seem like a pipe dream, right? I mean, we did get up to 122,000, I believe it was.
Yeah, 127, yeah.
127. But, and then we had this big pullback, and we've continued to watch it just sort of fade and fade and fade. And like you were talking about, I mean, it's almost had a bit of a magnet towards this 69,000 level for a little while, it feels like. But the movement is there. I'm not negative on Bitcoin. I'm not, I just look at it each and every day and keep an eye on things. But when you take a look at that and you see how directly that is affecting some of these various tech stocks that are investing and so forth, it's something pretty daggone interesting. There's no doubt about that. And I know you want to, you can fry me a little bit on this whole silver thing, but I got to tell you, they're coming back for more silver yesterday.
Yeah.
So the options market, that was a big drop that silver has taken, and gold has actually hung in there pretty daggone nice, still over 5,000, doing a great job.
Yeah, gold has held on real nice.
And you look over at silver, somewhere close to 80, 82, somewhere in there, 83, whatever it might be, but it's interesting because we are seeing more option paper come back into both into the GLD itself and the SLV. And I find that pretty intriguing. As a matter of fact, yesterday, 83,000 calls. It was a call spread that they put on. And that's what you and I have been talking about. Really smart to put on these spreads because you take some of that risk off to the upside. If you had to run all the way through there, I think you'd be pretty happy anyway. So, when you've got a $15 call spread that you've done 83,000 times for $4, it makes it pretty interesting if it were to break through. And that's a February expiring option. So, it's interesting to see they are not tired of GLD and they're not tired of SLV. As a matter of fact, yesterday with SLV, the silver, that one, 25,000 of the June 120s and another 40,000 of the June 125 calls. Both were bought.
Way out of money.
There's some size out there. They're buying some time going out to June, which I think is probably a smart move. They've done more of that with SLV than they have with the GLD. So it's interesting how they're kind of shifting around a little bit, but still they're looking for silver to be somewhere a lot higher than it is right now.
That really dovetails right into what Noel and I were discussing, which is the two different kind of utilities of these things, where both have seen volatility subside in recent weeks. But for gold, I feel like that's a little bit more welcome because people kind of want it to be a less wild asset. But for silver, to your point, if volatility comes in like it has, that might just encourage some of the speculators to come in and say, all right, well, now it's cheap to take some of those YOLO calls again, cheaper than it was a couple weeks ago, obviously. But it does seem like silver is more the home of the speculator.
Yes, absolutely. I think it's a combination of that, and also on the other side of it, when you look at silver and we talk about all the different things that silver is a part of, right? From EVs to you name it. I mean, it just seems like it's everything from phones to computers. Across the map, you're going to see something where silver is in demand, AI, data centers, all of that. So that's why I think when you see a pullback in other areas of the market, part of that is pulling off on silver as well, because if they're pulling back, it's going to drag down silver. So it's a matter of what happens with a lot of these various technology side of things that's going to actually be able to give silver another boost and get it back on the running and maybe get into triple digits again in the not too distant future. I'm not predicting that. I'm just saying that if all of those different other parts of this thing start to move in a positive way, I think silver's going to be along for the ride.
Okay. It's trying to, but it's got this kind of short-term downtrend, so it's going to be tricky. Yeah. It seems like it's got to be go time soon for this thing to reinvigorate, whereas gold has been putting in the higher highs and lows on this short-term chart since the beginning of the month. So it's fascinating to see how similar they were, but then now in the short term, kind of how the two have adapted a little bit, and gold's kind of found that edge. It's just, it continues to be just very impressive gold. Pete, a few kind of out there bets that I wanted to hit with you real quick. And one is very much macro because I've been talking about Powell and the removal and the replacement, the potential for bonds to go haywire. Now, actually, that's kind of going against me today because the 10-year yield has come in fairly significantly, down below 4.2, which I didn't see coming. I thought that line of 4.2 was going to hold, so maybe I'm wrong on this. But then what's funny is that there is still a 5% chance, even though Trump said it's warish on Kalshi, there's still baking in a 5% chance that something else happens here, which is like kind of classic Trump era, who knows, until the paper is signed and the man is in the seat.
Well, and isn't that the truth? I mean, we've listened to the president many times and say something, and then not too many weeks later or even shorter time frame, maybe things change it up, right? So I think there is, and that's something that we have to recognize when we're looking at something like this with Kalshi. We're looking at, the Fed chair in this particular thing, but when you consider the fact that Mr. Trump, President Trump, does sort of backpedal sometimes and move things around and shift around, I mean, I think that's something that we all have to be very cognizant of because it is actual. It is true. It's something that we've seen right in front of us going all the way back to last year in April when we had the major issues going on with all the tariff talk and so forth. So, but he seems to clean things up pretty well at some point as well. So, it makes it that much more interesting for all of us. But I think it's going to be worse. I can't imagine what would change that would pull that away from us. But I'd still be betting on that side of things.
Yeah, for sure. It sounds like the decision has been made, but so far, the bond market remaining pretty cool about it. So, look, I mean, if I got to switch my red light on bonds to a yellow, but it means a green light on stocks, then that seems like a good trade. That I think that would be a welcome shift. If the specter of a bond blowout lessens, then I think the specter of a big stock market breakout increases. Fair?
Yeah, absolutely. I think that's totally fair. And you know what? When especially with the backdrop of the earnings season and how solid it has been, right? The only thing that's really held us back in terms of the earnings season is what we talked about earlier, which is, particularly obviously in the tech space, but when they've got that CapEx, that's what's holding people back. You basically are crushing on the earnings, crushing on the revenue. The guidance has been strong, but you're going to spend XYZ on this whole thing when you come to the CapEx. And I think that's really what has been pulling somewhat on the markets because of that and the concerns that people have about that.
Very true. kind of how we started the earnings season, and it certainly has lingered. Pete, great stuff. Nice range, nice diversity as always on the subject matter. Thank you very much. Pete Najarian, Market Rebellion. 2-minute innovator buffer break. Then we come back and we'll talk some trading with Joel Hawthorne, my local favorite, BRB.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back to Chicago Future of Finance. Let's talk some more earnings. We've got NVIDIA later this month. We've also got some good questions in the chat coming today. Helping me answer those is the one and only Mr. Joel Hawthorne, professional trader, my man here in Chicago. Joel, what's going on? Good to see you again, sir.
Oh, man, thanks for having me, Oliver. Appreciate being on, man.
Likewise, long time no chat. Wanted to check in on your thoughts on what you're trading because we've kind of got this little bit of a quiet session, maybe an opportunity for us to keep some powder ahead of employment tomorrow. NVIDIA in 2 weeks, right, Pat? 2 weeks?
Yeah, definitely.
And then May, we've got this new guy, Warsh, coming in, even though there's a 5% chance, as we were just talking about on Kalshi, of kind of the Trump who knows what quota still lingering in there. So Tell me what's top of your mind.
You know, all of the above, quite frankly. I think NVIDIA obviously is going to garner a ton of headlines here in the next couple of weeks. Non-farm, I think, really is going to be the main topic tomorrow. I think we'll possibly see futures kind of be very chill, if you would, for the overnight session, maybe stay in a range until that data comes out roughly about an hour before the opening bell for non-farm in the morning. But I think right now, for me overall, I think just where the market is, I think we have to consider bulls need a catalyst. Bulls need some momentum. If we're going to revisit that 7,000 number in SPX, if we're going to revisit that number, we definitely need bulls. We need a catalyst. And right now, just looking at vol, looking at the VIX kind of parked right here, about 1760 or so, I just don't see a ton of momentum here unless we get a gap open, unless we get a strong gap open in the morning. I'm kind of leaning more to maybe we're not out of the woodwork for some downside momentum here between now and the next couple of weeks.
I'm looking at this line that's held since mid-December, which is kind of shocking that VIX has been so consistently uptrending, where usually these lines don't work so well on this particular asset. But what it tells me is that volatility has been creeping. We've seen index volatility basically catch up to single stock vol. But by the same token, if you've got a line that's established, if it breaks, that seems pretty bullish to me. If you've got an uptrend in VIX for months, and this thing breaks, if we do get the gap up, then essentially that tells us this kind of range S&P has been in could break out. I think that sounds like what you're telling me, and that we needed something real strong to get us through that 7K.
Absolutely. And keeping in mind, too, vol can increase and markets can still have upside momentum. Vol isn't necessarily always directional. So, and I think we're kind of seeing that in some cases where I think a lot of that vol momentum, when we do see a spike in vol, can be FOMO, could be people buying a ton of calls because they're afraid of missing the move.
Great point. Yep. Totally. I've kind of thought that could be, because we got a little bit of that when we first hit above 7K. We did get some of that because we talked about that at the time. I'm glad you bring that up, because I've got, let's just throw the VIX on top of this SPX chart real quick to see my point. VIX was creeping up when we were above 7,000 first week of February. When we were at 7,000, the first time we hit that, we gapped up above. VIX had been in a multi-week uptrend, so you can definitely have volatility higher and stocks higher, which could be, this particular, situation. The catch is, we've moved quite a bit for VIX over the last couple of weeks, where we might get a day or two, but hey, if people do get that FOMO and start ripping the calls, then that's a totally different story.
Absolutely. And one thing I think you've seen as well, keep in mind that every time we do see a bit of a pullback, what we're seeing is we're seeing buyers come in and buy those dips. And it doesn't always happen in the midst of your regular names. I think a lot of times I'm looking at a name today like a Qualcomm, who has been beaten up, trading at some lower levels that I think is due for a bit of a filling that gap after earnings to the upside, if there's some buyers that come in and feel like price is cheap. I think right now a lot of names are just like any other day is just what's the price and where's the volume. And when those two things align, buyers are coming in a lot of times.
I like the idea of looking for some of the big tech stuff that's been under pressure, or maybe even just stuck, right? One way to correct valuations is just to get something going sideways for a while. And I do think that's the case for NVIDIA ahead of earnings, which will be going sideways. To your point, Qualcomm just getting blasted already on earnings, trying to find some of the dips there. Stock like Alphabet, which has just been an absolute rock, now pulled back. One way to summarize this, as I've talked about, is the mags. We really hope that this group, because that's the type of scenario where I could see the FOMO style call buying, as if it comes from the big boys, the giants.
Absolutely.
Getting refreshed.
Absolutely.
Right now we've got this split market where it's like, all right, like Marriott looks great today. Okay, wonderful. But is that going to drive the whole market? Not really.
Right, for sure. And then keep in mind too, for a lot of short-term traders, for some of those that have been riding some of these massive gains in commodities, when you talk about gold and silver, you talk about the bears of the crypto stuff. When that money shifts and we see some of those larger tech names say, oh, things look cheap right here, that maybe getting quite a bit of a discount, it's kind of hitting the bottom, maybe this will be a good time. You'll see some of those, especially if the market has bullish sentiment. You'll see probably some of those names get a big lift. So that's my optimism. I prefer to be more optimistic than pessimistic most times. And I kind of lean in that side, but I'm nimble. I like to be prepared for anything.
Okay. Speaking of prepared for anything, let's hit a few of these comments. Real Axel points out highest ISM manufacturing survey since 2022. That's something I brought up earlier on the show. I'm glad I'm not the only one that's noticing that, because you talked about employment being a factor tomorrow, and I totally agree, Joel. I mean, I don't think people are really appreciating enough just how good that latest ISM print was. That thing does not go over 50 very often. I would be surprised if employment bombed. Here's the perspective on that chart again. This blue line being manufacturing PMI, its service is consistent as well. That seems like a setup to get a decent number tomorrow. But again, some of that activity in the economy might be coming at the expense of some jobs if AI is replacing it. But that's why these people got to trade, Joel.
Hey, man, that's exactly why, right? That's exactly right, because bottom line says either you're a buyer or a seller, maybe sometimes a little bit of both. But I will say this, though, and I think a lot of times I don't want to say fear-mongering, But I think we're kind of sometimes putting the cart before the horse with a lot of the jobs data. I think as we kind of roll into maybe fall, we know September is a big time. That fall season here, third quarter season is really going to maybe be the tail of the tape. As we're still coming out of quarter four from last year, I don't think we have enough data right now to really pinpoint this just enough information in the jobs data. That's just my opinion. I will say also too, just with everyone kind of beating the drum of AI is going to replace so many jobs. Yeah, but I think that's more of some of the engineers as of right now, some of the engineers, some of the tech guys. But believe you me, and you know this, because we share some buddies that we play cards with. Those guys, they're the first to be called at a lot of other organizations as well, man.
True, true.
So I don't think it's as bad right now as we are. I don't think anyone has enough information to say if it's as bad as it is or not that bad at all,
Yeah, no, I feel that. I think that judging by what we've seen in the cloud stocks, there's a lot of people. And by the way, I do think a lot of folks who might be getting displaced as a result of AI were in companies. They're going to have equity in those companies, even if it's down. They're making higher tier salaries, not really the types of layoffs because that's what I see coming. I do agree with you there. A lot of the mundane kind of stuff people thought their AI is going to replace, it's not really yet. It's really actually ironically hitting some of the higher end tech jobs.
Exactly.
As we see, these companies that are down 40, 50%, they're going to be making layoffs. Some of them already have been in tech,
Exactly.
but those may not be the types of layoffs that really shift the needle too much in the broader economy. Love the thoughts on the trading situation. Joel, hit me with one last one here real quick.
I think right now we talked Qualcomm, we talked briefly. You mentioned Google, which I love that one as well. I have just bailed out on Palantir. I was long some 135 calls late last week. That's one that I think maybe perhaps is going to see maybe a little bit of more weakness to the downside. I'm going to give you. There's another name that I can't ignore as well. And that other name that I've been looking at here, pull up my watch list real quick.
Palantir got really smacked, by the way.
Yeah.
Too.
I would say if someone, for me, I like some of the zero DTE stuff for equities on Fridays, particularly on Friday. Carvana. Spreads are wide, bid ask is wide, but I think it's down 4% today. If we get a big trading range on a Friday in a name like Carvana, that's the name that I think I'm going to be taking a closer look at on Friday because, man, you can get some really cheap, I hate to say gambling, but yeah, there's a bit of a gambling, some action on a Friday in a name like Carvana. So I'll be watching them in the next few days.
Nice, like that. Fun one for us. Carvana's always got a little action, especially if you're in the zero DTEs. Thanks, Joel. Great to catch up.
Thanks for having me.
Yeah, you got it, sir. Joel Hawthorne, professional trader. Speaking of zero DTEs, let's bring in a guy. Let's go straight to it. I'm going to blow the break here with 12 minutes left in the show. Guy who's got a whole room dedicated to the zero DTEs over at Prosper Trading Academy. Joining me, Charles Moon. Charlie, good to see you, sir.
What's up, brother? How's it going?
Going pretty well,
How are you
man.
doing?
I'm looking at a market that's pretty calm, but there's a few little items of action. MicroStrategy down again, Bitcoin down again. The bonds are rallying. I kind of got my face ripped on the bonds a little bit. I didn't think the yield was going to get down below 4.2%. What are you looking at?
Right now, I'm looking at stocks that are trying to rebound. I think there's some good fair value in names, in particular after this earnings season. RBLX is one that's kind of come into mind. TTWO had screened much higher here. But RBLX has been in this free fall from 130 down to 60, basically around $60. This is kind of getting towards the bottom edge of the chart where the 52-week lows are. So it gets a bit intriguing. There's still some, DOJ investigations, some bad, maybe some bad publicity around the stock. But, every parent I know that has a kid in a specific age group, they are diehard with RBLX. They always ask for Roblox. Yeah, Roblox gift cards. And I just don't see this, dynamic just dying off here anytime soon. It's a segment that hasn't been talked about a lot because a lot of the focus has been on AI. But when we talk about fair value in terms of opportunity, this is one that I'm looking for here to try and break out above 81. I think above 81, this could really start getting frothy and making a pretty strong run towards $100.
I was a long time kind of a Roblox stan. I do agree that it's just such a unique game, but also just a unique business model as well. It took a long time for that chart to kick in, and then it finally did last year, and then we unwound it all. So, is there that much volatility in the business model? I thought it was consistent in terms of its business model. The kids log in all the time. You've got set, recurring income, sales. What am I missing on that? How come it's such a volatile stock? And it's also, by the way, here's what I'll say, is it trades very uniquely. There's not a lot of other charts that look like it.
Right. And, part of it is stigma too, right? There's a lot of negative stigma related to Roblox, what it's being used for in terms of network. I don't, it's hard to explain because you could say the same thing for Microsoft and Minecraft. You could say this for Sony and PlayStation. The truth of the matter is, it's an environment. And when we look at it from a business practicality or business modeling, it's something that's consistently in demand. It's got a really strong following. It's generational. Every age group that, of these kids, as they get older, they start discovering Roblox, and what do they do? Well, it just becomes a money-making machine in terms of revenue generation from that kid, from that family. And, it's kind of in that scope where if it continues to find the interest and demand, especially from the targeted, age group that they've been going after, the truth of the matter is a lot of parents are like, okay, well, you do well in school, here you go. Here's some Roblox bucks.
Exactly.
If you do your, do your chores, here you go. We don't want you outside. It's getting a little, dangerous outside or whatever. It's complex in a sense because it's the new generational way of parents trying to keep their kids busy. Again, it's family featured, it's family friendly. And it's, again, something that could be applicable for kids going forward as they're developing these skill sets, that are highly desired by, the tech sector in particular. So, it's part of that environment where it just has its own foundation, its own following, and its own ecosphere. And as long as that ecosphere is alive, they're going to continue to generate revenue. And as long as these kids continue to discover it, they have new clientele, coming in where the old clientele starts falling off.
I've thought about it as kind of like a Netflix to some extent, and I guess maybe that is one chart that does sort of mirror it a little bit. And I'll tell you what, if there's one company that whenever, it looks like it's in doubt, you buy the dip for long term, because Netflix goes through long downswings, it has. But at every turn, this company, for example, the Jake Paul fight, which was silly. I thought, when I watched it afterwards, but then at first I was like, this guy made $20 million on this. And then I ran the numbers based on their subscriber rate, and actually the math added up. The number of people who are sticking around, tuning in for these things, they forget their subscriptions, they have the cheaper model now. Any type of entertainment, I feel, that has that recurring model, it's so hard not to want to buy these dips.
Yeah, and I mean, listen, Netflix has done this since they've IPO'd, right? Dating back to when I first started trading in 2007, I believe David Einhorn around 07, 08 shorted the stock for 100 points. Yeah. So it has a history of just, getting pummeled and then always rising from the ashes. And again, there was a reason why it was, considered a FANG stock, which has now, been replaced by the MAG 7. I don't really understand the suppression in price. They've shown growth in subscribership from their gaming ventures. They're looking to increase their library with highly popular and sought after and strong following names and titles. Their subscriber rate and growth is still maintaining, even though they don't really like to have that as a central focus on their earnings report anymore. And I mean, when we talk about Netflix, well, you know, go back to their first, when we talk about the Paul brothers fight, I believe it was Logan Paul who was the first to show up on Netflix. That production was horrible. People had issues streaming. They couldn't get the production right. You know, that most people didn't even get to see the fight because Netflix kept crashing. And then on this most here, I mean, it was clear, crystal clear, 4K production was great. You saw their production in their last 2 football games this year. They paid, I believe, $150 million for the broadcasting rights. Those were incredible, and they only focused and centralized their ads towards Netflix and Netflix products. And so I just feel like this is a undervalued stock. Again, you could tie it to streaming, gaming, whatever you want. The truth of the matter is they're now trying to incorporate more growth cycles by venturing into video game subscription as well as sporting events. You know, I think this is really just an incredible value for the long run in Netflix. It just one. It's not a matter of when. It's a matter, or not a matter of if. It's a matter of when.
Yeah, the sports has been such a key component of it because one of the reasons, I'll be honest, one of the reasons why I went through a period where I just consumed no sports, which was probably like somewhere like, I don't know, after college into like 2 years ago, maybe 18 months ago. It helped that the Cubs were on a nice streak, and then the Bears obviously had a great year. But the reason why I didn't consume a lot of sports too is because I didn't know where to find it. It wasn't important enough for me to have specific subscriptions to different sport. You know, like I didn't even know where to find these things. People would say, hey, watch a game. Where do I want? And now they've just blasted it right in front of us to where if I'm working on a Sunday or a Saturday or something, any night of the week, really, and I need something that's not as engaging, but I have the ability to kind of multitask. Maybe I'm cutting clips from the show. Maybe the sports is right there in front of me. And now that it's showing up on Amazon, Netflix, other places, it makes it a lot easier to consume. And I can see why that market has been so massive. So Netflix, I like the idea of trying to buy it on support. Roblox, I feel like is like a riskier, wilder version of that trade. Certainly in a nasty downtrend, but maybe worth a stab. The question, I guess, for this week, as we think about the news flow, Charlie, is tomorrow jobs, and then obviously the crypto bloodbath that resumes. Is there anything related to the news flow that's short term that you think is opportunity? Do you want to go stab at a BMNR or something like that that's just been obliterated, or a master? Tell me kind of the short term of stuff that's gotten really hit. I mean, I know Netflix and Roblox have gotten as well.
Yeah, I mean, honestly, I don't think there's still a lot of downside left for crypto. I don't think that we have found a floor yet, especially if the precious metals market continues to get volatile. It just kind of coincided, and maybe it's because it's leverage on leverage, but for whatever reason, we kind of just saw that free fall in Bitcoin, and it just wouldn't stop. And now they're trying to find a floor. But, without a sustainable rally, well, this just becomes a momentary pause, and then it becomes a fade the rally move. It's kind of the same thing that we've seen in these SaaS stocks. Wall Street's calling it SaaS apocalypse. And, with rightful reason, we've seen Claude come out with these 11 new plugins that could develop these AI agents. And it's rightfully so. Why would you pay CRM, $200 an hour for a, customer service call when you pay Claude $5, $20 a month and get all that information for free?
Exactly.
And when we talk about the capabilities of these AI agents, I didn't realize that at this point how vastly advanced things were. I thought we were still a bit away before we saw these software enterprise stocks really having to deal with the idea of massive competition, and in basically a 2 weeks period of time. And Claude basically wiped out trillions of dollars worth of value in these stocks. We're talking about Adobe, CRM. It affected the cybersecurity names like CrowdStrike, Palo Alto, and Zscaler. Workday just free falling and not stopping, and I just don't know where the floor is.
Doesn't look like it's today because they're getting hit even more. Adobe down another 80 bips. Charlie, there's the bell. That's our cue. We got a big crowd here at Cboe getting ready to ring. Thanks, buddy.
Thanks for having me, brother.
You the man. Prosper Trading Academy, thanks for tuning in to Chicago Future of Finance. I will see you tomorrow at 2 p.m. for the jobs reaction into the closing bell. Have a good night.